So when it comes to cash flow and long-term investing, how do you build, for example, an investment portfolio that actually gets you both of these things to actually maximize the amount of money you're actually going to make? Now, by the way, I'm the most boring guy on YouTube, and for a very long time, I never really thought about producing cash flow per month to actually give me cash in my hand, whole hard cash, to do with it whatever I wanted to. My mindset was always on, hey, as long as I keep investing money into the stock market in the next 20, 30 years, I'm gonna have a good amount of money and I'm gonna be able to actually retire off that. And that sounds great. Sounds great, right? But when it comes to the stock market, it takes a long time to actually do. You can't really interrupt it. And on top of that, if you do take some of the dividends from it up front, that's money that actually could have grown. So I realized that what you really want is a balance between both, and that's what I'm currently working on right now. So overall in this video, I'll show you exactly my plan to actually build up some cash flow, money that's given to me every single month, and also to build up my long-term investments, money that I invest that I'm expected to actually get later in the future. Again, having a long-term mentality is cool, but also having a mentality to actually get something today immediately is also cool. This just balancing act to actually get it done the right way. Now, the very first thing, guys, is this. As always, guys, like this video, on top of that, also subscribe and hit the bell to get notified. Now, here's where this idea actually came from. A few weeks ago or so, I was talking to my rich uncle. He's telling me, Tommy, I think the time is coming when I actually want to retire. Now, the crazy thing is that for him, he wants to have around $10,000 per month almost come into him in cash flow, passive income, every single month. For me, that's way too much money. I'm fine with like $1,000, $2,000, $3,000, $4,000 is amazing, but $10,000 is just way too much. But again, he is in his 40s, I think almost 50s now. Yeah, he's in his 50s now. He's been doing it for a lot longer than I have. He's been working a lot harder for just ages, okay? So I'm a lot newer to the game. But what I realized is that he tells me, Tommy, I made a little mistake, and the mistake was I have so much land and all this land appreciates in value, but in a sense, my cash flow does not give me enough to actually go ahead and retire right now. So his whole thing is now, well, I can't go ahead and say, well, I have land that I got, let's say an example, okay? I bought this land for 100K. Now it's worth 500K, but it's not like I can just go ahead and basically take out the 400K and then boom, no. The only way to take that money out is via selling the property or selling the land, then basically capitalizing it, and then you pay taxes and so on. And you really want to avoid all those things, okay? So what he really wants to do now is get involved in what can I start investing money into to produce for me cash flow to actually equal the amount of money I actually want to get. And he's very close to actually doing it, which is actually amazing. And I aspire to actually get that done for myself also, but I really don't need that much money overall. So here's the cool thing about this, okay, guys? When it comes to cash flow, I really want you guys to picture this idea and this definition, which I'm actually giving you. And the idea is cash flow is the amount of money the investment actually nets you, right? After it covers all the costs. Meaning, for example, if I bought a property, and it nets me, let's say, well, it makes me gross $1,000 per month. And after all the expenses, I'm left, for example, with 500. That is my actual free cash flow. Owner's cash flow. That's the money I actually get in my pocket. It's not the $1,000, it's the actual $500. So the goal is to build up to this. Now, there are several assets, not just with real estate, where you actually produce cash flow. You have, for example, stocks, real estate, and also business. These are all different levels of risk, thus they also produce different levels of cash flow. Number one, if you're going to be investing into stocks, and I used to be very heavy in stocks, okay, the answer is, because the risk level is a lot lower, depending on what you're investing into in the stock market. For me personally, I'm very boring. I do the S&P 500, so overall, I'm looking to get somewhere like about 8% per year. And by the way, in reality, it's more like 11 to 12%, but I like to use low numbers this way. I want to go low on my potential profit. So if I get higher, great. And I want to go high on my expenses in case they go up, I still have enough, okay? That's the way I actually like to build things, okay? But when it comes to the stock market, the overall deal is pretty simple, okay? It's all about compound interest, and you don't want to interrupt it. That's how a $100 investment per month over 30 years at 8% can turn into about $146,000. But that happens over 30 years. It's a very long time. And it also requires you to invest $100 every single month over 30 years. That's a lot of discipline. time and effort. Okay, so that's the game when it comes to stock market. And you might say, Tommy, well, that's not the whole picture here, because you can also get dividends. Okay, and after a year of receiving dividends, you can actually get qualified dividends, which is basically taxed at a different level, which saves you money. I get that idea, but usually on average, if you're doing index fund investing, you're most likely not going to make more than 2%. Okay, I make like 2% actually when it comes to dividends, because basically I bought at different prices, but overall you're not going to make a lot of money via dividends via the stock market. So the best thing to do is probably have that dividends reinvest itself, and it's probably going to be a better use of that capital, okay? Because in the end, it's going to be a lot more money. So when it comes to stocks, I really only see it as a long-term capital perspective for the future, and to only take that money out when I have way more than I need, and it makes no sense to actually just keep compounding it in there. So for me, it might be to have like 2 to 3 times more than the money I need in there, and then I can finally go ahead and start taking money out. But for now, it just makes no sense. So that takes a very long time to actually accomplish and actually do. Number 2, real estate. The cool thing is that real estate, when you buy the land, the actual property, guess what? That also appreciates with time, right? You can have, for example, massive appreciation when you have, for example, certain times, like we had a pandemic, it went up by like 14%. That's crazy stuff, but that's not normal. The average is more like 3%. The actual is more like 4.5% to 5%. But again, I want to use 3% because I want to go low. But because you are, for example, having 3% appreciation, which basically covers inflation, guess what? You also have, for example, your cash flow, what you actually get for renting off this property. Unless it's a personal property, then that's not an investment, because in reality, you're just going to break even because of all the costs associated with actually living in a home, right? So I'm talking about rental properties exclusively here. So if you're looking at rental properties, let's say you can actually make 8%. The answer is that 8% is going to be yours, right? So once you discount, for example, all the expenses, the taxes and everything like that, whatever's left over, that's owner's cash flow. That is free cash flow. That's what you actually get. And that's awesome. But again, if you're going to do it with real estate, it usually requires either 2 things, okay? Either or two things, okay? One, you can do it like I want to do, which is basically without debt, and that requires a lot of capital, a lot of time, and a lot of patience, because to save up a lot of money to buy a property, properties are expensive. They're not cheap, right? So it takes time to be able to save it up. 2 is leverage. Leverage adds risk. So it's to say, well, I'm going to go ahead and put down 10, 20%, buy this property, borrow the rest of the money, rent it, have the tenant pay the rent. But the risk is if they don't pay, then you're in trouble. If something happens, you're in trouble. And I don't really want to be involved with that. So I'd rather just go the slow route. But that's my personal choice. So that's like a healthy balance to actually get it done. Now, number 3 is going to be cash flow via business endeavors. So overall, my uncle is doing this. So he's just getting started to actually start, for example, a car dealership. On top of that, a finance leg to that dealership, and also has a grocery store, and also a few little businesses here and there. But the idea is with all these forms of business, because again, businesses have different levels of risk, usually higher levels in real estate and also stocks. So guess what? You also get larger returns, meaning more cash flow. He's actually able to actually get there a lot faster. But again, there is a different level of risk. So everything has, for example, is pros and cons overall. So business, you can actually make a lot of money, but it's also risk that can stop at any moment. Stocks, they're great, but they're for long term. Real estate is awesome, but it does require hefty amounts of capital. So the best way, or my strategy, if you want to use it or modify it, or just say, Tommy, this one's not going to work for me, it all depends on you, okay? But my strategy is very simple, is to keep investing 10, 20% of my money into the stock market. That's basically in perpetuity, like forever. It's just to build it up, and which is great. So in the end, 30 years from now, you have all that money in there. It's been compounded. That's great, right? That's another leg to financial freedom. Number 2 is save up money to diversify into real estate. That's my second leg. So that means I want to have, for example, enough money coming from real estate to cover all my expenses. That takes time, like a lot of time and a lot of patience. And with real estate, it's not like, oh, you buy, you're good to go because land, you're not making any more. No, if you buy incorrectly, you can be out of money for a while, okay? It's not like that simple. So you have to do your research. You have to know exactly what you're doing. And third, as far as business, I'm looking at different legs on how to actually, for example, like make more content that products and things like that to actually make here on YouTube. That actually makes some more passive income in a sense, because when you make, for example, like intellectual property, you can make money in perpetuity, right? And it's like you only do the work once and it keeps coming to you passively. But those are all endeavors that I'm actually trying to do, but that's all for cash flow. Cash flow is king in the sense that you need money to cover your expenses while you allow your capital to actually keep growing in perpetuity with, for example, the lesser risk options like the stock market and so on. Okay, that's the idea, guys, overall. So when you think about, for example, do I lean towards long-term investing or do I lean towards cash flow? The answer is I'll probably do both. Set a limit though on the long-term stuff because it is long-term and you do need cash today. All right. And the only reason I'm doing this is because basically at some point, let's say something happens, right? And you don't want to work anymore for any reason, or you just want to have some more security. The answer is if you have cash coming in every so month, more than you actually need to actually live, that's a good feeling because you basically can do whatever you want whenever you want. You have a lot more freedom. And that's what financial freedom is all about. But guys, that's it for this video. Comment down below free so I know you made it all the way to the end of the video. And comment down below exactly how much money do you want in cash flow, okay, per month? Like how much money do you actually want? And what is your preferred method? Is it going to be business, real estate, or for example, stocks? Comment down below. Or if you have another idea, comment down below too, because it's also interesting and I might make a video on it too. Okay, so as always, guys, like, subscribe, hit the bell so you're notified. Up here is another video. Over here's my face. Let's wrap. And as always, long-term team officially out.